recording in progress. That does it, doesn't it? There we go. And then we can keep the camera on.
Yeah.
Perfect. Can you all hear me?
Yeah.
Yeah. All
Good. Right, so let me just go. Oh, sorry, I'm a little bit flustered because I got in late. I do apologise, everybody. Let me just get at the order of the day, and then we can get into it, and we'll get the charts open and go from there. Just give me 2 seconds. Where are we? Gallery. Okie dokie. So I am conscious.
I feel left out now. I ain't got my camera on. You know, this is fucking stupid.
I know.
You lot are gonna make me buy a camera, aren't you?
Well, you have a mobile phone. I don't understand why you can't just put your mobile phone on.
What, like Zoom with my mobile phone
Yes.
on as well? And
Exactly that.
but can I be on both at the same time?
Yeah, just mute one.
There you go. Pete knows. Pete looks like he's been in the corporate world and is accustomed with the Zoom life.
Took too long, hence why I'm here to get out of it.
Dan, how we doing, mate? Nice to see you. You good?
All good, yeah. All good, thanks.
Good man. Right, okay. So there was a couple of questions that were asked in the Discord. One of them was about identifying strong wick rejections. Now, I think that was asked by Rick, who hasn't actually joined us today. But I think what we can do is, if we get some charts open, I'll talk through what I would class as a strong wick rejection and what I would class as a non-strong wick rejection. Question: has anyone's trading view gone like really white, as in like bright white today?
Me, I haven't. Yes, it's quite white. Yeah,
It's like changed color, isn't it, from its usual kind of dark background? How can we change that? Because it is horrendous. Is there a way to change it? Dark. I bet it's called dark mode or something, isn't it? Let's see. Found it. Right, sorted.
are you guys all from England, right?
Yeah. Well, I think a few of us are. The guys that you can see are from England. Where are you from?
Yes.
Oh, I come from Havana, Cuba, but I'm living in Cuba.
Wow.
My daughter living in London. That's why I was asking.
Oh no.
It was a sick country. I've been twice. I'm real there.
Cuba, you like it? I love it.
Well, I mean, it might be different to live there, but it's nice to go on holiday.
Yeah, I completely. But still, even living in Cuba is just healthy for your mind, and especially for men. There's so much struggle that you need to prove yourself every single day, and that raise yourself as a strong personality, I think.
Mm.
I'm so sorry, guys. My charts have gone completely wacky. It's deleted all my colors. It's deleted everything. What the hell has happened here?
Can you not see me now?
By the way, it's a pleasure to be here, guys. I just joined it today, and I think this is going to be great.
Hey,
Good on you. You just started your journey.
No, I mean, I have been trading already for roughly 4 years, and I have been consistency. I have found consistency like 1.5 years.
Nice. Good, man.
Love that.
Yeah.
That's good shit.
Thank you,
Glad
guys.
to have you.
I mean, the thing is that I have been struggling so much with YouTube and things like that, and then I found myself struggling with supply and demand. Didn't understand quite a bit of it, and then I said, okay, I'm gonna go back to the roots of trading. So I went down to the thing that everybody's running away from, which is called Wyckoff.
Yeah, I love Wyckoff. Me and Jake met each other through Wyckoff.
Mm. Yeah, we know him personally. Actually, we had dinner with him a couple of weeks ago.
There you go. So that's mainly what I trade, and I simplify it because Wyckoff can be, if you go deep into it, can be a little bit complicated, and I mix it with SMC. I only use SMC to just see the structure of the market.
Yeah.
Just to enter in the trades and have the confirmation of the bias. I just use Wyckoff. That's all.
Good
Yeah,
shit.
I
Sounds like you've got your plan already down to a T. Money.
Yeah, I have everything. Yeah, I figured it out.
I think there's different phases of a trader, definitely. What I'm going to do is I'm going to start sharing my screen, and I'll show you what I mean. Okay. So everyone see my screen, yeah?
Yes.
Yep.
Perfect. Right, let's just get all this shit out of the way. Right, that's gone. Get rid of it. How do we hide that? I hate this fucking panel. It always shows this horrible panel at the top. Hide video, hide floating panel. They're gone. Right, okay. So Let's just jump up to a daily chart just so we can see it. Okay, now I think there. Hello, Hardy. Hardy, could you put your microphone on mute for us, please, pal?
Legend.
Cheers. I've got to change this because this isn't my colours. Those of you who know me know my colours, and these are not my colours. So let's just change them. Can't even remember what my colours are now. I think they're this. Doesn't seem right. Looks off. Anyway, we'll sort another time. That's a little bit better, at least. Okay, so there's kind of 3 phases, I think, as a trader. Okay, most of us get into trading, and we look into retail patterns. We look into supply and demand. Support and resistance. And I think almost everybody, unless you've got into it very, very recently, will have probably, if you've been into trading in the last kind of 2 or 3 years, you will have probably looked at one of these kind of 3 basic trading strategies where you're either plotting on support and resistance lines, which can work to an extent. You might be looking at trend lines in the marketplace, which can work to a certain extent. Or you might be looking at things like, bullish flags like that to that. And there is a theory behind all of them that does ultimately mean that they work in some way. There wouldn't be strategies based around them if they didn't work. But I consider this as phase 1, okay? And phase 1 is the most oversimplified version of what Forex trading is, okay? Then what happens is most traders move into what I would call phase 2. And phase 2 is where you start seeing some really good profits. You can start passing prop firm challenges. And I'm not saying that phase 1 doesn't work, but it is more difficult to make profits with these kind of retail patterns, these really basic retail patterns. Support and resistance can work. Trend lines can work. And you might get your 1-to-1s, your 1-to-2 trades out there, but most people's appetite is much greater for more winnings, which is why most people fail, I think, with the basic retail. So from there, you move into SMC, smart money concepts, you move into Wyckoff, and you move into supply and demand. Okay, and this is phase 2. And this is kind of where me and Jake were about kind of 2, maybe 3 years ago. What happens is you start involving more advanced concepts. Let me just hide some of this stuff down here. I'm going to lock it and hide it just in case I need it for another time. Get rid of that external line as well. Okay, so what happens here is we then start involving more advanced concepts. So we might start including there a supply and demand zone. Okay, we might start looking for things like, let's see if I can see one on this chart, SMC raid entries. So here we've got a raid on the lows there. You can see a little raid there. So let's mark on some liquidity. We've then had a push. We've had a nice little imbalance in there. And then we've had a retest of this demand zone, which is that one there. And we then take our trades with a nice SME confirmation. Okay. And we hold up to there. Hardy, can you put your microphone on mute, please, pal? Actually, I'll do it for you. You're done. You're quieted. Okay. So we're then looking into SMC, Wyckoff, supply and demand. And what we've probably got in here, you can kind of see, we've almost got, we've got an accumulation in there, haven't we? Let's get that out of the way. We've got an accumulation. So we've got there. And then we've got our test, and then our break, and then our push up. Okay, so that's our Wyckoff pattern. Okay, let's mark him in there. So we got Wyckoff in there. And then if you're lucky, you can start making profits with that. And phase 2 can be quite profitable. But the problem with this is that there's an overruling algorithm that is controlling everything in the marketplace. The big buzzword now is SMC, smart money concepts, Wyckoff, supply and demand. And you'll notice with supply and demand, you can have the cleanest of zones like this one here. And look, this is a chart, as you can see, we very clearly picked at random. I didn't even think we were going to be talking about this today. But you can see how this supply zone looks really, really good. We've got rest and liquidity there, and then price trades through it before moving up, okay? There's a reason why SMC and Wyckoff and supply and demand aren't as effective as we all want them to be. And this is where I think real traders get into it, okay? Where you've got advanced ICT methods. Okay. Despite what you may think about ICT, he has popularized algorithmic trading and liquidity-based trading. ICT is a strategy at the end of the day. I've got a lot of respect for the guy. I trade a few of his concepts. What he's done is he's popularized advanced trading, and he's trying to simplify it as much as he can. But ICT concepts are algorithmic trading. Algo concepts are obviously algorithmic trading. And what I trade, what I call it, which is basically all the same thing, is advanced liquidity. Okay. What's happening in these areas is there's an algorithm. And the reason why retail patterns, support and resistance, SME, Wyckoff, supply and demand don't hold as well, and the reason why I changed through all three of these phases, is because liquidity-based algorithmic trading styles make a lot more sense. If anyone's gone from, how many of you have gone from retail? So how many of you have gone from phase 1 to phase 2? Yeah. And did you get that moment where you're like, shit, that's why this doesn't work and that's why this does work? You know, when somebody first teaches you about supply and demand, and you're like,
cracked it. Yep, I was like, the markets are mine. I know how this works now.
Yeah, I got it.
Didn't.
I've nailed it. I understand it. Okay. What's actually happening is all of this happens at the same time. Okay. There is validity in everything here: supply and demand, support and resistance, but it's all because of the algorithm. So there's an algorithm, a controlling algorithm that runs all markets, financial markets that have a chart. If you can find a chart on it, it is controlled in some way by the IPDA, which is the International Price Delivery Algorithm. Okay. This is built in institutionally to all trading markets, especially in Forex, crypto, all of this stuff. And what it's doing is, it's like I always imagine it like a snake, and it is moving up and down the marketplace, hunting out stops and orders. Okay. And if any of you have studied kind of ICT or any kind of algorithmic based trading, you'll understand that all that this thing is doing is hunting out areas of liquidity where there is money sat, and it's going to come and get that stupid thing out of the way. It's going to come and take all of this out of the marketplace. And all it cares about is taking this liquidity out of the market. Okay. Now, this has got really messy, as you can see. But the point I'm getting at is every single strategy that is taught works to an extent, but every single strategy is a simplified version of what the algorithm is doing. It's a way of you taking a framework that is really complicated and difficult to understand and turn it into something simple and easy to understand. As you can see from this, and I love how well this has worked out, because it's making me look like I really fucking know what I'm talking about. Okay. What you can see here is that we've been able to draw on every one of those strategies onto this chart. We've drawn retail patterns, we've drawn support and resistance, trend lines, Wyckoff, SMC, supply and demand. And it's all worked out because ultimately it's the algorithm which is moving the marketplace from one place to another, taking out orders and then reversing. Now, the simplest way I can teach you guys to learn how the market moves is to understand that the most important thing to your trading over everything else is liquidity. If you want to trade SMC and Wyckoff, that's fine, but you need to make sure that the basis of those trades is based around liquidity. Your Wyckoff patterns, for example, if we use this one as our Wyckoff patterns, there has to be some sort of liquidity in this area for this Wyckoff pattern to work. Your SMC entry, okay, this supply and demand zone, there has to be some sort of liquidity in this area for this supply zone to work and this trading to work. So what you'll find over time, I think, as you get more experience in the marketplace, is you'll move from phase 1 to phase 2 and then to phase 3. And phase 3 is where you truly understand what's happening. And it makes it a whole lot simple, because now I can look for liquidity areas. Once I've seen, even in a bullish marketplace, I see a key liquidity area to be swept, I can get into a trade quite comfortably, and I can hold it down to a liquidity point to the left, maybe that first one here. I don't trace massive trades where I'm looking for 5R, 10R. If I get one, amazing, happy with that. But I'm after 2 or 3R out in the marketplace once I've seen some sort of liquidity being taken out. And you'll find that every single move in the market, however you look at it, is based around some sort of violation of a liquidity area. And when you start making this the basis and the foundation of your trading, because I think most of us are taught that structure's king, right? I remember I was taught that. Structure is the number one thing that you should be looking for in the marketplace. You need to find your trend, and then you need to follow your trend. And then if the trend is broken, then the trend has ended and all that nonsense. But what is probably likely to happen on this Euro chart is that it's probably going to push up again. Well, that to me didn't make sense. I'm like, well, if the trend is like that, then how can it break that low and then continue bullish? And how many times do you see that in the market? You see it all the time, don't you? Structure broken.
Yeah, like a bearish break in a bullish market is most likely just taking out liquidity to go higher again.
Exactly. And that's exactly right. And what this move is, hopefully it does move higher. And again, it means that you guys rewatch this in 2 weeks' time and think, shit, that Checky really fucking knows his stuff. All right. What we hope has happened here is this is just a reach on liquidity to the left. Because look, and this is why things like SMC, so SMC, their foundation is, of course, structure, isn't it? Market structure. SMC needs market structure. That's the number one thing that you're taught. Your market structure first, then supply and demand, and then your lower time from entry like Wyckoff or SMEC concept entry or whatever it may be, okay? What ultimately is happening here is the algorithm knows now how many people are trading SME concepts, and they are expecting people to buy the shit out of this marketplace here. And when they do, they sweep you out. So the algorithm is going to constantly look for liquidity. Now, what's great about liquidity trading is, unlike a concept, so retail patterns, they have a really strict framework, don't they? You've got your support resistance lines. Well, you wait for price to come to a support line and then you buy, okay? Your patterns, you have to have a certain pattern in order for that trade to be valid, okay? SMC, Wyckoff, supply and demand, all of these things, there's very fixed rules that you have to follow. So if your structure is broken, for us now as a supply and demand zone trader, we'd now be looking for sells technically, because this structure has broken. Therefore, what's great about algorithmic trading and liquidity trading, if you can learn the concepts, and I'm here to teach you guys, is you cannot fall foul to the algorithm changing what it's after, because there is always going to be highs and lows in the marketplace. There is always, therefore, going to be liquidity sat at these levels. So even if we get a new trading strategy that starts changing the way the algo behaves, there's always going to be highs and lows, because the price makes money by moving up and down. So when you start to grasp that actually all you're waiting for is for certain areas to be invalidated, it will change everything that you do. And you can see that,
Brother.
Any of. How you doing, buddy? Sound like you fell down the stairs. Okay. I really hope he's okay. I've muted him. What we can see is that even if you were to, let's say this move pushes down, we've got this key liquidity area here. If we just, why does this fucking thing come up again? Let me get rid of this panel again. Gone. Okay. If we take our replay tool back to here, what we can probably find is there's probably a pretty decent entry in there somewhere. So that liquidity area, yeah, okay. And this is the beauty of it, is that when you use these higher time frame liquidity areas, so let's just get this absolutely snapped up, okay? So that is there, that's our low is swept. I'm gonna go down to our 15-minute time frame. We're gonna look for a lower time frame entry, and we've got a perfect one there, okay? So that's our liquidity area. We've got our beautiful little ISC candle there. We can mark that on. I wouldn't have taken this because this is in Asia, but the setup is there. We enter on a manipulation setup. So this is my classic setup, which is push up, push down. Oh shit, that's the wrong one. Can everyone see that clearly, yeah? Push up,
yeah,
push
mate.
down, push up, push down, push up. And then waiting for a manipulation, which we get when price comes down here. And then here, yeah, okay, and then that's our golfing. So that's my setup. That in itself is a little Wyckoff accumulation in there. You can see that. And this is why this shit works, because these appear in these key liquidity areas. You can find any of these strategies in these key liquidity areas. For me, I'm not looking for 10R. So for me, even though I'm in a bearish marketplace, I've entered this trade because I've taken liquidity. And when we take major liquidity out, whether it's daily, 4-hour, or even hourly, we are usually going to have some kind of reaction. This setup has then given me 3R. For me, that's given me about 1.5%, 2% out of the marketplace. And I'm happy as Larry. Whatever happens after that, it doesn't really matter to me. I really don't care. Now, this turns out to be a really lovely trade. And as you can see, it pushes up. We've got some fantastic movement here. You could have got 10R out of that. But ultimately, what's happened then, the bearish market trend has come back into play. And this is why these liquidity concepts are so good, because you can make money either way. It doesn't matter how you're trading it. You can make money however you need to. And then, you've got your range here. Let's mark this on. So we've got our trade out. We've taken that out. And what I will do then is I'll set up a range. I'll see if I can find my various liquidity points. So this is quite a big impulsive news move. So we've got an imbalance here that we can trade from. Mark that across, which we've tagged quite nicely. We've got resting liquidity there, which we can see from that high, which we can tag on as resting liquidity. And then you can see price comes into there. Okay, it sweeps out the liquidity, tags into that supply. We've got a first entry here, which you again would have got 2R out of, down to here. And then we've got a second entry here. You probably wouldn't have caught that bit. It's a bit messy there. You might have even got stopped on that first one, to be fair to it. Yeah, probably would have got stopped on the first one. But second entry, big push down, retest, catch that nicely. And then again, you've got your 2R out in the marketplace quite comfortably. So for me now, trend is of course important. Okay, structure is, absolutely, it is important. But for me now, all I'm looking for is liquidity areas and areas where I'm looking for reversals from. So look, I think we got maybe a little bit off track. I think it was a really important thing for us to go through.
Can I just butt in?
Push go.
Check. Basically, I think what Check's just said it there at the end in a nutshell is I'm moving my mouse, but none of you can see. Instead of number one being retail patterns, so this is in order of importance now. It should sort of be advanced liquidity, one, understanding why liquidity and how liquidity moves the market. And then the second one being structure and the normal basic SMC concepts. Once you know that how liquidity works and you start factoring in structure and stuff like that on top of it, that is so much more powerful. It's completely changed the way I trade in the past 2 to 3 months. Like I don't see high low and supply and demand. I still have them on my chart, of course, where necessary, but most of the markings out on my chart now are all just liquidity based things, because the market doesn't respond to supply and demand. It responds to liquidity, because liquidity is money, and that is the only way that the market can move. So it's just in order of importance now is that people actually really focus on the liquidity side of the market, because most of the people here, if anyone's new, of course, then yes, they should focus on structure and stuff like that first, because if they just dive straight into liquidity, they'll be like, what on earth is going on here? They'll have no idea. But if you are already part of and have been part of the smart money stuff, then you should really dive into the advanced liquidity section from Check's YouTube and the videos and stuff like that. Then it will completely change the way that you view the market, and that's going to be so much more powerful for you.
Yeah, I think Jake's hit the nail on the head there, really. There's nothing in this. I personally wouldn't trade the first part, but I feel like it's almost like rite of passage, isn't it? Everyone has to kind of go on this phase one, phase two.
Part of the journey.
If you're lucky, you might not have phase one. You might have just started at SMC and then you're coming into phase 3 pretty quickly. And if so, you might skip the 2 to 3 years of my life that I wasted.
I'm jealous, yeah.
But absolutely, what you've said is absolutely right. If you were to put this as the priority and to learn the advanced concepts, if you could learn those first, there's no reason to change your strategy. For example, yourself, Yoel, your Wyckoff structure will work perfectly if you involve advanced liquidity concepts first. And your SMC entries, for those of you who maybe trade SMC, and structure and supply and demand, all of that stuff, again, that would work really, really well combined with a algo-based, liquidity-based strategy as the primary. I think what's important is that most of these strategies, they teach you, look, retail patterns, you need to find the pattern and that's about it. SMC, you need to find your breaker structure, chalk, whatever they call it, and that's it. What we're missing, I think, from a lot of education that I've personally seen is missing is the advanced liquidity training, which I think most people do miss.
Can I say something?
Of course you can.
Yes, makers.
I think that mainly, basically, what we need to understand is that for example, every strategy or every trading method have their own end or their own propers, and I think Wyckoff is more like swing trading.
Sure.
ICT, algorithm, and advanced liquidity, you can use it in both, but mainly is intraday trading where you can spot like the past week liquidity and you can actually move towards that. And that's mainly what I want to say. Like, if you want to be a Wyckoff trader, you need to be thinking more about swing trading, because Wyckoff is just determining when the swing points are going to start and what is the end of the trend that Wyckoff is going to deliver, right?
Yeah, I mean, I kind of agree with you. I think everything's fractal in this marketplace. Wyckoff will work really well on the higher time frames for swing trading. You're absolutely right. I think possibly you haven't spent as much time in the lower time frames as maybe
1 minute time frame.
I have traded Wyckoff on very low time frames down to the second, so it definitely does work on the lower time frames. I think with trading, it's really important to find your own personality, and if your personality, Yoel, is for higher time frame swing trading and Wyckoff works for you, then fantastic, because now it's yours. You own it and you develop it, and that's exactly what we should do. But you may find that there comes a time, maybe in a couple of years, that you think, do you know what? I want to be a day trader now. I want to get into my market. And just to reassure you, your Wyckoff strategy will work just as well on the lower time frames as it will on the higher time frames as well. And I know that only because I've traded it before.
I mean, the only thing I didn't understand at the beginning of Wyckoff, I didn't understand why Wyckoff have to turn the market.
Yeah.
And the reason why Wyckoff in this case was turning the market is because internal liquidity already being built that the market need to collect in order to keep moving. And then I was like, let me go into ICT. But then when I go into ICT, it was like the only thing that this guy is showing here is basically what he only discovered. I'm not saying that the guy doesn't know what he's doing, but he just discovered the price action that auto blocks deliver and fair value gaps. Mainly everything else, in my personal opinion, is Wyckoff with different names.
I think that's the point I'm trying to get at here, is that all of this stuff works. That first, when we were looking at the chart at the start of the call, I drew all of these different strategies onto one part of the chart. Everything is just a framework around how the market is moving. I think the important thing to understand for everybody here is that it's all based around this, the IPDA. The IPDA is what controls the marketplace. If you don't put that as your number one priority, then your trading is doomed to fail, in my opinion. You need to understand that there's an algorithm that delivers price, and that algorithm is hunting out orders, and that's just matter of fact. So as long as you've got that as your basis, and then you build your trading strategy around that, then you're onto a winner. And the point is that any one of these strategies will work so long as you have this at the forefront of your mind. You know, if you're looking to be a retail pattern trader and you want to trade a bearish flag pattern in, I don't know, a marketplace like this, then you could see one here. Okay, we know that we've taken liquidity down here. We've now got a bullish flag here. Okay, so now I've taken liquidity. I know that price is likely to move up into premium pricing, so I can confidently take a trade like this with the expectation is that price is going to at least get to this liquidity point. So any one of these strategies will work, whichever one it is that you choose, so long as you understand that it's the liquidity in the marketplace that fuels everything. Price will only be able to move once it has collected orders. It's a zero sums game. So every time you win a trade, somebody has to lose a trade. And what the algorithm is doing is it's pushing price into certain areas to make sure that there are markets being taken out of the order. That's why fake outs happen, because loads of people place their stops below this level. They fake it out and they take sellers out of the marketplace and buyers out of the marketplace. And that's when you often get these manipulation moves where they move up and then they move down, then they move up, then they move down before they then move up and move down. And then, you've got these manipulations before the bigger moves. It's just taking people out of the marketplace. So the market is then clear for the bigger price moves. And like I said, any of these strategies will work as long as you have that foundation there. So I'd like to talk through a couple of the areas that we discussed. I think one of the important questions is regarding understanding when. I think we are a little bit limited on time. Can I just ask, did everyone find the Zoom link through, was it my Discord, the Strong Money Forex Discord, or was it other places?
Your Discord.
My Discord, yeah. Is that the same for everyone on this chat? Anyone else not find the Zoom link? And you are right, Pete. Yeah, it's interbank. Apologies. My bad. But everyone found out my Discord. Okay, fine. So what's going to happen is in 6 minutes' time, this recording will end, and it's going to require me to send a new link. So I think what I'll do is I'll stop it here. I'll put a new link into the Discord right now. Can I just triple check if there's anyone else that didn't find it through my Discord? This is now your chance to say, and I can make sure that the new link is somewhere else as well.
Or write it in the chat. If
Yes.
you haven't got your mic on or whatever.
Yeah, right in the chat. Just give it 30 seconds, then we can get into it.
I've got to leave at 7. Bang on, check. All right.
Yeah, that's fine. No, we're going to finish up at 7 anyway.
I might not be able to, because I have my baby alone here because my girlfriend went to sauna. In Finland, everything is about the sauna on weekends.
Okay.
So thank you so much, guys. This is an amazing place. I really, really appreciate to be here, and it's an honor to share this moment with you guys. I'm going to be really active in the Discord.
Love
right?
it.
Good. Looking forward to it, man.
I'm just here to collect information and just give information.
Yes.
And yeah, that's mainly what we're supposed to be
Good to
doing.
meet you. Good to meet you. What I'll do is I'm going to be recording
good to
this
meet you.
anyway, so I'll make sure that it is recorded and uploaded to YouTube and that sort of stuff anyway. Okay.
Thank
Right.
you
Okay.
so much.
So those of you who want to stay, we're going to be on for another 20 minutes. I'm going to end this share now. I'm going to send a new link into the Discord, into the Strong Money Forex Discord, and then we'll go straight back on that call. Okay.
How do I leave this place?
Bottom right corner, mate. It will say leave.
Okay, leave. Okay, thank you.
Yeah.
If it doesn't do that,
Just realised we were recording that. That was such a good bit. This is such a good bit as well. You're gonna have to start again.
Yeah.
Said again.
Rewind it. Rewind it.
get the end of
So
that.
Pete, you were just saying that something really interesting.
Well, So has anybody got some random thoughts on this? Well, here's one. So yeah, super quick. Like going through from like the retail patterns, the retail sort of we learn supply and demand, then you get to support and resistance, you go through Wyckoff, you go through everything else. Learning where everybody else puts their stops and where I used to put my stops and how you adjust that to now being like, right, well, there's the massive pool of liquidity. Why would I put my trade above that liquidity pool?
Yeah.
Now wait for that liquidity pool to be taken, the stops to be cleared out, and then wait for the confirmation for the price to move in the way that you think it's going to go, or plan for it to go.
Yeah.
It may not. It may take the stops and continue lower, which means entering at that stage still was not the right thing to do. So yeah, so that's basically how I'm kind of trying to transition my trading right now, is to move into the liquidity piece.
Yeah.
Study it, mark up based on liquidity, wait for the liquidity to be taken.
Yeah.
Then drop down to lower time frames, wait for that confirmation that price is reacting to that, enter on a more modest RR, like of a 2 to 3 to 1.
Yeah.
Is kind of where I target. And then yeah, I mean, if I can do that part-time, off getting a couple of alerts, ping whilst I'm at work, and then I can log back on and spend 5 minutes on it, then great.
And I think, I think this is where I think we're so brainwashed sometimes by strategies. So you're taught a strategy like supply and demand, and you're taught that basically the supply zone needs to hold. And as long as the supply zone holds, you get 3 pushes into that zone, and then a nice rejection, imbalance, with a return to order, you can sell it. So I used to have supply zones, like the cleanest supply zones you could have ever seen. Price would wick them. And I'd be like, right, well, the zone's invalidated. So my trade's over. And I wouldn't even acknowledge the fact that actually after it's wicked, it's moved completely in my direction, giving me the perfect setup. And I think
Yeah, it's almost like your brain. Like I had the exact same thing for ages as well,
Yeah.
but it's like as soon as it goes past that stupid little box,
Yeah.
and then even though you're watching the price go up, you're like, well, you know, it didn't stay in the box, so it ain't the one.
The trade
I
don't
better wait
work.
till next time. Yeah, it just doesn't make sense, does it? You just
And
watch the bloody trade, and it makes so much more sense.
And you'll
Yeah.
see it all the time. And I think this is where, you know, as a new trader, you'll have, you know, I'm trying to find an example now. You can never find an example where you need one, can you? But I think as traders, we have these. So that's a good one there. Okay, so beautiful supply with imbalance sat below. Ah, shit. Well, price has gone above it. So, well, I can't trade that now. But then look at that setup. Look at that setup. Look at how clean that setup is. That's a 30-minute liquidity sweep. That's a massive liquidity sweep. When you think about, when you understand it, you understand what's actually happening, okay? This is now a mass volume of orders that's been pumped into the marketplace to take out that liquidity plus various liquidities to the left. So we've got another liquidity area here. And then do we get that one? We don't get that one, okay? But we've taken out two major swing points here on this kind of hourly time frame, let's say. What's happened now is price has swept that area. Just lost my zone. Don't you think TradingView needs to develop a little bit of coding where when you change the time frame, it stays where you are?
Yes, absolutely.
It's
When you're
the
back
most
testing, that is a nightmare.
frustrating thing about the charts. So yeah, so look, you've got this really clear sweep, okay, nice institutional sweep there. Then we've had a nice push down. Look at that beautiful manipulation setup. So we've got our first bearish push, then a lovely little corrective motion, and then an engulfing pattern. That's my gold setup these days. I'll take that all day fucking long, and I could have held that to the low, and I would have got 8R out of it. Amazing. I would have got my first trade out here, which is lovely 3. But I was in the past seeing that and thinking, oh, well, structure's changed now. I'm bullish. So what I've got to be doing actually is, now we've broken bullish, is I've got to be trading this demand zone here instead. And it's so nonsensical when you think about it, isn't it? The market is that simplistic that basically once a box has been blown, well, you can't trade it anymore. And I know you and Jake, you and I have talked about these trades all the time. We've taken a buy from here and been like, why the fuck didn't that work out? Well, because obviously the market's still fucking bearish. It's really fucking simple.
Sorry, just zoom in on that price action in that demand.
This one here.
Look at that. It's Wyckoff. That is literally Wyckoff, but in
Wyckoff.
like after it's accumulation into a distribution out of a demand zone.
Beautiful.
After a massive liquidity.
Look at that. That's a gold setup. That's the perfect estimate. And you're like, oh fuck, it's gone.
Yeah. And then like now that you know that price has just taken massive amounts of liquidity from the top side, like the fact that that's turned in from an accumulation into a distribution from a demand zone, how much more money do you think they have just generated in that one zone to trick people into the market again?
Yeah, exactly. And I think it's so key to remember these things. Like I said at the start of the call, all of this stuff works. You just need to understand that liquidity is what makes it work ultimately. Right, so I want to talk about tonight when and where the market is likely to reverse and how to enter and exit when it does. Okay, so this is basically my strategy. I'm going to try and condense this into 10 minutes. It's going to be a tough job, but we're going to give it a good go. So for those of you who have watched my latest videos, you'll be a little bit clued up on this already. For those of you who haven't, let's just find a random range. Let's go back to here. Let's pop this one on here just so we can have a look at it and we can trade it as if it's a live marketplace. So I do, contrary to possibly what we've just been discussing, I don't want this to confuse anybody. I do still use structure in my trading, but the basis of how I will use that structure is from a liquidity standpoint, if that makes sense. So I'm still paying attention to where price is moving up and down. Okay, so we've got a nice, lovely little reversal here. So I'm still paying attention to where price is moving up and down. And I'm conscious of the fact that we are in a bearish structure here. So we can see high to low to high to low to high to low. Okay, blah, 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 all this nonsense. Okay, we can see that we're in a bearish downtrend at the moment. but I'm always going to be keeping an eye on various liquidity points. Daily liquidity is really, really important. And when I'm looking at daily liquidity points, I'm going to be looking at key swing points like this. You can't really see it very clearly on the daily time frame, but if we look at here, we've got our key swing points here. So what I'm doing on the higher time frames is the same as I'm doing on the lower time frames. I'm waiting for price to come back down into a premium area. Okay, this range is valid because this is the range that broke that high to the left in this, higher time frame bullish scenario. Okay, we are bullish, we're using that range there, we are having a look at that, and then we're expecting once price becomes rebalanced, which is anywhere below that equilibrium level, okay, we are expecting somewhere from here some sort of bullish price action to give us an indication we're going to go bullish again, okay, to continue this higher time frame trend. That in its simplistic form is what I'm looking for. Now, what I do below these areas is I'm looking for daily levels that we could be taking trades off. So we've got a daily level there, okay, daily level there. These are those little spikes we saw in the daily time frame earlier. And then we've got a daily level here, okay. This is where a lot of supply and demand zones, support and resistance lines will come in. They're usually daily levels, and you could probably trade these levels back, and you see that one there, look at that. Perfect little support and resistance, okay, and that's why that works. But it's not the support and resistance that's changing the marketplace. It's not the line, and that's the really important thing, is that this line is not what's changing the marketplace to go up and down. It's the liquidity that is sat above and below highs and lows on this line. That's why the line works, if that makes sense. It's quite difficult to get your head around, but it's important to understand the difference between it. So for us now, what we're looking for is once we've reached this discounted area, with our premium discounted area being in the bottom half, we are looking for key reasons to go bullish. So if we are looking in our discount area here, we are saying, right, if price comes into here, if price comes into this first quarter, we're going to be interested in buys. If price comes into this bottom quarter, we're really interested in buys. And we can assume then if we get bullish price action that we're going to be going long. So for me now, I'm looking at, say, the hourly time frames, and then I see this beautiful multiple broker structure, which has taken out this liquidity level, and this liquidity level. Okay, beautiful little area. That is a signal for me to say, do you know what? We've got to start paying attention to this area. We've got to start paying attention to it because of the higher time frame bias that we're bullish. We need to be looking at it. We've taken out this daily level here. Let's get rid of this one. We've taken out that one, and you can see price tagged it, had a lovely reaction. You would have probably got a trade out of there and gotten 2 hour out of there. Fine. We've then had a continuation bearish, and you'll notice that when price isn't ready to move completely bullish, it might take out little kind of intermediary highs and lows to the left. Okay, but it won't take out like this multiple. When price really convincingly pushes up like this is when we start paying attention and really starting to look for potential entries. So if we then trace back this trade and we look at our range, okay, of this zone, this is how then I'm looking at setting up. So for me as an intraday trader, I'm looking for a sweep of, in a bullish scenario, a sweep of an external liquidity point, which is the high and the low of the range, which is either that one or that one. Okay. Or I'm looking for a sweep of our range liquidity, and that's where you'll get some really good trades from. Okay, range liquidity. One thing that's worth noting with range liquidity, okay, range is the last low before the external low, or in a bearish scenario, the last high before the external high. So in a bearish scenario, it'd be up here, of course. The important thing to understand in these situations is it can take the range, it can react, and then it can push down further. So it's really worth paying attention to that. And then this here is a perfectly valid supply zone, okay? What's great about liquidity concepts is there's multiple reasons that it could go long. In a standard SME setup, you're looking for a supply or demand zone, and then you're looking for a smart money reversal. For me, there's various reasons I could be going long. I could be going long off the basis that I've got range liquidity. I could be going long off the basis that I've got external liquidity. All I know is that from here, I'm going to be strongly considering a bullish setup. And this is ultimately what we get. Now, we just drop down a time frame further. The next step is to drop down into a lower time frame, something like the 15-minute, and this is when then I'm now looking for setups like this. Now, if I can get some bullish breaks of structure like this, and I can get a nice setup out of here, depending on the time of the day, what I'm going to be looking for is a liquidity area that's going to take me out of this zone. So we've tagged our range liquidity and we've rejected with imbalance, haven't we? Really, really clean. Everyone can see that, yeah? Pretty simple setup. And what would happen is, and you can see how many people have tried to do that, all the smart money traders, they then get in here and they get swept out, okay? But what we've got to remember is that this is a significant move. This has taken out range liquidity off the back of a move that has taken out daily liquidity. The market doesn't move that quickly, and we don't have to jump into these trades this quickly. So what I'm going to be looking for is, I don't trade around 11 o'clock, 12 o'clock. It's a really bad time of the day. I trade a lot of the time the New York Open traps, and I just need to take this back a little bit further so you can see what this trade does, okay? I've now got an area that, we don't have the data. I fucking hate it when this does this. Do you know what? You pay all this money for TradingView Pro and you still can't get data. Really annoying. And I've lost it. Right, it's
Jack,
here.
I remember the other webinar and you did it about 5 times in a row.
90,000
man.
times. Oh, I was so cross. I was cross. There's not many things that get me cross, but TradingView not giving me bars of data, fuming.
Bro, that shit was so funny.
Right, I can get down to the 5 minute. That's good enough. Okay, so what I'm looking for when New York opens is, I'm looking for what New York will typically always do is, and this can be either, funny enough, I've recorded a video on it today, so I've got a full explanation of it coming out soon. What typically happens when New York opens is there's a mass injection of price, okay? In the same way that when London opens, there's a mass injection of, orders, not price. And this will often cause a false move before a distribution move, okay? So like an accumulation like this, Asia is normally the accumulation of the day, manipulation, which is London, and then distribution, okay? Now, New York, to a smaller extent, does the same. And what it normally does is it leaves behind a trap of some kind, okay? Now, technically, the New York Open trap is here, but you can see it's actually much clearer up here, okay? And they're both as valid as each other. The point is it's a false move. So this entire move down that New York has effectively created from about 12 o'clock, where the New York orders start coming into the marketplace, down to about 1 o'clock, this is a false move. This is a trap, okay? I'll draw it on technically just so you can see what I'm looking for, because on the 1 minute time frame, it will be a lot clearer. This zone here, let me just get rid of this red box so you can see it a bit better, okay? That is our New York Open trap. So I'm not interested in trading here. I haven't had any liquidity, and whatever I'm trading, however small of the time frame, I have to have a liquidity move to get me into the trade. This is not a liquidity move. And in fact, when you've got moves like this, and this is a really important lesson that I learned, when you have moves like this that is just one big candle up, price is very, very unlikely. How many of you have learned kind of fair value gap or imbalance based trading strategies?
Before anyone answers that,
Yeah.
Jack, I've got to bounce, mate, so I'll
Yeah,
I'll
mate,
catch the rest of
I'm
it.
I'm recording it anyway.
Later. Yeah, nice one. Enjoy, boys. Pleasure
Lots
meeting
of
you all and
us-
seeing all your faces and that.
Cheers,
Cheers,
Jake. Lots of
Nice
us
one. See you in a bit.
understand how imbalance based trading works, okay? You draw out your imbalance, price comes to it, and then you trade off it. But again, just like any of these strategies up here, they fail more regularly than they win. And you can make money out of it if you have a good risk management strategy. The reason why they fail usually is because there is no fucking liquidity sat in there. There is a massive imbalance. And what that causes price to do, what the algorithm wants to do, is swallow up all of these orders. It needs to balance out the marketplace. It needs to rebalance what the market is doing. So this massive move up, this isn't a place it's going to reject from, because where are the fucking orders sat? Where are the stops sat? Where are the buy stops sat? They're sat below here. So when you're looking at these imbalance moves, imbalance is great to have as part of a trade. But again, the primary factor it needs to change direction is liquidity. If, for example, you had that and then a resting liquidity zone like that, that is then a perfectly valid move that you could trade off. And it would then often cause a good reaction. But once again, it's the liquidity that you need. And what's happened here is you have the false move from all the imbalance, newbie ICT traders that push up like this, and then it sweeps every fucker out of the marketplace. It takes everybody out to get that imbalance. To get that liquidity. It takes that liquidity, then it takes the low liquidity. And remember, it's not just this move. Technically, this is the demand zone. It's not just that move that generated that massive imbalance candle. All of this is orders. All of this is orders, but the liquidity's been taken. The entire move is what we look for, which is why we draw ranges from the very low to the very high. That's where we're looking for trades from. This then becomes external liquidity, and external liquidity is where mass volume of orders is sat. If you are trading a range-based style like mine, you do have a lot of orders sat at range liquidity, and it can often reverse the market completely. But the mass volume of orders usually is sat under the external liquidity. And that's why when you have price take these areas out, take out range, small reaction, that then creates the trap. When you start looking at this and really analyzing these marketplaces, you'll see that it is so fucking engineered. It is so deliberately placed to keep you poor that it becomes not easy to make money, because I still have losing days and I still have losing weeks, and I still have my own stupid mental games that I play. Like, for example, this week I had 5 trades that went to my first profit target. They didn't quite take the liquidity that I needed, but they did get to my 2R. So I had 5 break evens, or I think 2 of them were losses and 3 of them were break evens, when I should have had 10 hour out of the marketplace. So we all have our own demons. Okay. And I was greedy last week. I was very close to passing another challenge, so I wanted it. And anyway, long story short, it was bad. So what you'll see is that the engineering that the algorithm does to keep you poor is, it feels like there's somebody behind it. And how many times have you guys had a winning streak and then on demo, or a winning streak on maybe phase 1 of a challenge, and then you go live or you get phase 2 of the challenge, and you have those moments where you're like, how is this fair? Why all of a sudden has it stopped working? Why, when I take an FTMO trial, do I win in 3 days, but as soon as I go live, every single time I fail? It feels like somebody's out to get you, doesn't it? It feels like there's somebody there. I've had these like almost cathartic experiences recently where I'm like, I'm in a simulation and I'm doomed. I will never become a Forex trader because there is somebody out there who doesn't want me to be a Forex trader. You have those moments. The reason why it feels like that is because the algorithm is, in a way, like an AI. It understands human psychology and it understands how to trick us. But when you start seeing what it's looking for and how it's working, and you understand the concepts that have been right in front of your eyes every single time, it makes it a lot easier. So, come back to the point. Taking out range liquidity, we've got a little bit of a reaction here. We've taken out external liquidity, we've got an even nicer reaction. Okay, now we would go down to our lower time frame if we were able to. Okay, we've got low to high to low to high, and then manipulation, and then an engulfing there. So for me, that's my perfect setup. I come in here, I enter on the engulfing, stop below the low, room to breathe, profits off at first liquidity, which is here. You might have just missed that one. You would have got it pretty easily there. Again, there's a liquidity point there technically. First liquidity is there, 1.6. I would have probably held it for at least 2. Maybe that imbalance there. Trap is blown. So the engineered trap that New York always puts into the marketplace is typically always blown the same day. The video that I'm about to release tomorrow about trading the trap, you'll see how many times it happens. But once you stack these liquidity concepts together, you can use structure, you can use SMC entries, it doesn't really matter. You've got to get this part right first. And we've gone from, as you can see, we've gone from our daily time frame, okay, to look at where we are expecting price to be reversing from. We've got a daily range that we've into discount area. We've then, on the hourly time frame, we've drawn out our range that we're going to be trading from. And then we've dropped down to our lower timeframes to find our entry using, again, the same concepts, but it's all based around that liquidity. And then you held that to there and you would have been taken out for break even. And it looks like it's then done what it often does. And again, this is an algorithmic based strategy. Okay. It's then liquidated, even me out. I'm now out at break even. And then the bigger move comes. So you could have got back in if you've got an entry maybe around here. Shit stop on that one, and then the chances are this is probably just going to fly up. Yeah, okay. So the liquidity that the market is afterwards, the liquidity that the market is after is constantly being manipulated, and you have to be ready for these things to be retested over and over again. Okay, you have to be ready to take a break even and then get back into it. As long as your higher time frame liquidity points are being liquidated and you're getting into positions in the right areas, it's difficult to get it wrong. The worst thing you can do, and I've fallen foul to this loads of times in the past, is see a bearish setup and just assume bearish price action. Always zoom out, have a look at what price could be doing, have a look at what's the most obvious liquidity point to be taken. So that's really kind of all I've got for today. We'll do another one of these soon. Does anyone have any questions for me in general? Nobody? Not a problem if you don't. It just means I've done my job properly. Hello? Okay. Well, look, guys, thank you for joining. Really appreciate the time. I'm going to get this all recorded. I'm going to get this all edited and up on YouTube so you can go back and watch it. As always, if you have any questions for me, you're always welcome to message me. If you want to direct message me or message me in the chat, you're welcome to do so. And look, thank you very much for your time. Appreciate you turning up. This has been the busiest webinar we've had, which has been fantastic. And we'll try and get one in a couple of weeks.
Yeah, that's really good, mate. Thanks for your time.
Hey, you're welcome, Sam. Appreciate it. Good to see you, mate. Good to see you. Cheers, guys. Have a good evening. See you later.